Assalamualaikum and hi everyone. I am Nur Syaidatul Akmal binti Muhammad Izwan BDB 2207075. So today, me and my group mates will present to you guys about our assignment, which is business finance. So here we have acknowledgement, question 1, question 2, question 3 and references. First of all, prizes are due to Allah for giving us enough strength and motivation to push through this assignment until the end. To all my group members, thank you for completing this assignment successfully just in time. Also, big thanks to our lecturer, which is Madam Siti Haja, for giving us a good guideline. Let's move on for the first question. Calculate the liquidity ratio of Apple Company. Comment on the liquidity position in 2022 as compared to 2021. Analyze and interpret the company's performance based on attachment 1. What the formula to search current ratio? The formula is current asset divided by current liabilities. From the calculation current ratio, we can see that Apple Company current ratio is lower than the industry average, which is 1.07 times, and that means the performance of the company in 2021 are much more better than 2022. This is because more higher the number are much better. After that, let's calculate for asset test ratio. The formula is current asset minus inventory minus prepaid expenses divided with current liabilities. For the asset test ratio, quick ratio in 2021 is 1.02 times and 2022 is 0.84 times. That means quick ratio in 2021 are more flexible than 2022 because 2022 did not exceed 1. The current assets are low dependent on inventory of the company.
For question 2, 3 factors that affect the current company performance is first, liquidity management. It seems Apple Inc.'s company may be struggling with effectively managing its short-term assets and liabilities, or they may not be able to pay off the short-term debt. As you can see in the current year 2022, total current liabilities is $15,3982, higher than year 2021, which is $12,054.81. The difficulty to pay off the short-term debt is affected the current performance of Apple Inc.'s company. Factors number 2, inventory management. Inefficient inventory management can tie up a significant portion of company current assets. If the company has excessive or obsolete inventory, it can negatively impact the current ratio. As you can see in the Apple Inc.'s condensed consolidated balance sheets, inventories in current year 2022, which is $4,946, is lower than inventories in past year 2021, which is $6,580. For the third factors, it seems Apple Inc.'s cash and cash equivalents in current year 2021 is lower than past year in 2021. Lower cash position may indicate that the company has less readily available cash to cover its short-term obligations such as pay suppliers. This could raise a concern about the company's liquidity and ability to meet its financial commitment.
Assalamualaikum and hi, my name is Muhammad Azaiman Bihalim and my ID number is BDB 2207027. Now I'm going to continue explaining the question number 2 part 1. Based on the journal titled Apple Financial Analysis and Development and Research, Apple Incorporation known as one of the largest successful companies of the 21st century. However, the company also has been no exemption from facing the global issues and the consequences such as supply chain issues, inflation, pandemic and others. Therefore, there are a couple of factors that affecting the effectiveness of Apple Incorporation managing its assets, such as the first one is the impact of the coronavirus. During the outbreak of the coronavirus in 2020, Apple Incorporation confronted a very tough situation where it lost almost $8 billion of its revenue for the April until June quarter due to the lockdown worldwide. The situation became worse when Apple has a high dependency on China to manufacture and distribute its product, where around 39.77 $2 billion revenue is solely generated from China's production. Responding to this situation, Apple warned its investors that it would fail to meet its previous estimated revenue targets while the company's stock continues to decline. Besides, Apple decided to postpone the launching of the new products due to the lack of demand and logistical problems faced during the pandemic. Next, the second factor is intense competition with other brands. The development of the technology and innovation throughout the century gave a huge opportunity to the other brands to come out with the latest products, with the latest technologies in order to meet the customer demands. This advancement of the technologies unfortunately become a threat from rival towards Apple. For example, Samsung has introduced new Samsung Galaxy Z Flip 5 that offered the first ever flip smartphone in the world. Therefore, Apple has to continuously launch new technologies to compete with other brands such as new series of iPhone and also reviewing the pricing policies in order to be ahead of its rivals.
Hello and Assalamualaikum. My name is Muhammad Irfan. My ID number is BDB2207070. So I'll cover the question 2.2. So the question is, choose any one ratio under asset management categories. Suggest two ways to improve the performance of the company for that ratio. So the result of the discussion with my group members, we decide to choose the liquidity ratios because it is listed in one of most important ratios to keep an eye on the business. Liquidity ratios also help to determine whether a company has enough short-term assets to cover its short-term liabilities. So as we can see in condensed consolidated balance sheet of Apple Incorporated that has been given, the liquidity of Apple in 2022 is lower than 2021, which means the ratio is decreasing. So here, I provide a few solutions or suggestions that Apple should do for their company. First, Apple can offer the discount to their debtors in a due date that they have set, which means within the date given, the Apple's debtors can settle their debt with the discount offered. If due date has expired, the debtors need to pay like usual, means no discount for them. So, the debtors are not getting any benefit if they do not pay their debts. This can encourage the debtors to pay their credit early and also can avoid the bad debts. And second, Apple should manage their current liabilities properly. Apple can reduce their high current liabilities with negotiate better payment terms with suppliers, which is ask for the lower price from their supplier. Other than that, they can ask the supplier to extend the time to pay the bills. So this can free up cash for other users in the short term. So Apple supposedly can plan well for their future financing. That's all from me. Thank you.
Debt to equity ratio. Apple Inc. recorded higher debt to equity ratio compared to other competitors. This ratio measures the proportion of a company debt to its equity and indicates the level of financial leverage. A lower ratio is generally considered better as it suggests lower financial risk. A high ratio shows that the company used more borrowing, which can lead to huge debt to be paid. A company should try their best to use more equity and less borrowing as their sources of financing. Apple is interpretation. Year 2022 50% versus year 2021 53%. This company shows the increase of ratio from 2021 to 2022. The significant increase of 2% can cause the potential low profitability and high expenses in debt. Apple Inc. might go through difficulty in paying back debts if this ratio increases over time. In addition, the company should use more equity to lessen the borrowing sources. However, does Apple Inc. manage to keep their debt-to-equity ratio lower than industry average? Year 2022, 15% versus industry average 43%. Unfortunately, Apple Inc. recorded higher debt-to-equity ratio compared to other competitors. The excess of 12% in borrowing can cause inefficiency in managing companies' financing. As an investor, surely look into higher equity usage in financing to invest their money. Thus, Apple Inc. might not very suitable for investors to invest as it might expose them to burning their money. Time interest earned. It seems Apple is able to cover their interest charge. Time interest earned measures the firm's ability to cover its interest charge out of its operating profits. The higher the ratio, the higher is the firm's ability to fulfill interest obligation. Failure to meet this obligation might expose the firm to the risk of bankruptcy, as the creditors can take legal action against the firm. Apple Inc.'s interpretation. Year 2022, 5.2 times versus year 2021, 3 times. The increases of 2.2 times from 2021 to 2022 recorded by Apple Inc. shows that the company is able to pay the interest charge. This is a good management of financial in terms of attracting investor attention. Besides, it's giving Apple Inc. a positive image to those investors and gain their trust to invest. However, does this sign give any impact to the company? And now we compare in year 2022, 5.2 times versus industry average 4.1 times. Apple Inc.'s success to keep up with the industry average ratio. In fact, the company had more than the other competitors in industry. The difference of 1.1 times between the company's current ratio and industry average ratio might attract the investor to invest in the company as it promises a better vision in investing.
Hi, my name is Nurkhairunisa Adlina. ID number is PDB2207042. For question 3, my answer will be, as an investor, I will definitely invest in this company. This is because when I analyzed the company's financial, I found that the company managed to stabilize their borrowing to not cross the industry average ratio. Apple has the ratio of 32% of debt ratio, that is none higher than the industry average, which holds 35% of debt. As an investor, I will look into a company who has a lower debt ratio to invest in, and Apple has proved that they are worth the money. Apart from that, Apple has higher gross profit margin among other competitors. Apple gained profit in around 76.5% and exceeds 11.5% of profit than the industry average. This shows that the company is effectively managing its production costs. Apple also proved that they have a great selling strategy that convinces investors to invest in their company to gain a good return. Overall, Apple is a good plan in investing your money. Invest more and gain more than what you expected.